If you're trying to decide whether to rent or buy a home in Cincinnati in 2025, this is the video you need to watch before you make a move. With rising rent prices, changing mortgage rates, and tons of opinions out there, it can be hard to know what actually makes the most sense, financially and lifestyle-wise. In this video, I'm going to break it all down for you. I'll show you the real numbers behind renting versus buying in Cincinnati, and how home ownership can help you build long-term wealth, including options most people don't think about, like using your home equity to invest or upgrade. Hi, I'm Nathan Williams, your Cincinnati-based realtor, and I help people just like you buy, sell, invest, and relocate to the Queen City every single week. If you're planning a move in or to Cincinnati, I'd love to help make the process easier. You can call or text me anytime or schedule a free one-on-one call with me using the link in the description below. Now let's get into it. Let's start with renting. As of 2025, the average rent in Cincinnati looks like this. A one-bedroom apartment averages about $1,200 a month. A two-bedroom is between $1,400 and $1,700 a month. And if you're looking to rent a three-bedroom single-family home, you're probably looking in the $1,900 to $2,400 range. And here's the thing, rent is going up. Most neighborhoods in Cincinnati have seen rent increase between 3% and 5% year over year. Now that might not sound like a lot, but over 5 years, that's a huge jump. Let's do some quick math. If you're renting at $1,800 per month, you'll spend over $21,000 this year, and more than $108,000 over the next 5 years. That's money that goes straight to your landlord, no equity, no ownership, and no return. Now let's look at buying a home. Right now, the median home price in Cincinnati is around $250,000, but can vary depending on the neighborhood. Let's say you buy a home for $275,000 using a 5% down payment and today's average interest rate, around 6.75% on a 30-year fixed loan. Your monthly payment, including mortgage, property taxes, and homeowner's insurance, would be around $2,000 per month. Now you might be thinking, well, that's about the same as rent. And you're right, it is. But here's the difference. When you're paying rent, 100% of your payment disappears. When you're paying a mortgage, part of that payment goes back to you in the form of equity. And that equity is what sets homeowners apart financially over time. Let's compare what happens over 5 years. If you rent for 5 years at $1,800 per month, you'll pay about $108,000 total, and you'll still have the same net worth as you do today. Now let's say you buy a home worth $275,000. Over 5 years, you'll pay about $120,000 towards your mortgage, but here's what's different. You'll have paid down about $20,000 to $25,000 in loan principal. Your home could appreciate by anywhere between $30,000 and $50,000 or more depending on market growth, and you may get $5,000 to $10,000 in tax savings depending on your income. That means your net gain over 5 years as a homeowner could be anywhere from $50,000 to $85,000 just by living in the home you own instead of renting. And that equity, it can open doors. Now this is where things get exciting. When you own a home and it goes up in value, or you've paid a chunk of your mortgage, you've built up something called home equity. And that equity can be leveraged to do a lot more than just sit there. Let me give you 3 powerful ways people use equity to build wealth. Number 1, cash out refinance to buy more investment properties. Let's say your home has appreciated and you've built up $75,000 in equity. You could do a cash out refinance, pull out $30,000 to $50,000 and use that as a down payment on a rental property, giving you passive income and long-term asset growth. This is exactly how people go from first-time home buyer to real estate investor. It starts with that first home. Number 2, they use the equity to pay off high interest debt. Instead of paying 10% to 20% on student loans or credit cards, you can refinance your home, lower your monthly payment, and use your equity to get ahead financially faster. This isn't about borrowing irresponsibly. It's about using your home to eliminate debt and reduce financial stress. Now, I'm not saying buying is right for everyone all the time. There are a few good reasons to rent. Renting can make sense when you need flexibility. But if you're planning to stay in Cincinnati for at least the next 3 to 5 years, buying is almost always the better long-term decision. It gives you stability, control, and the ability to build real wealth over time. So what makes more sense in Cincinnati in 2025, renting or buying? Well, the answer depends on you, your goals, your income, and your timeline. But if you're planning to stay in Cincinnati for at least the next few years, and you're ready to start building equity, not just paying rent, buying a home is one of the smartest financial moves anybody can make. and I'd love to help you get started. You can call or text me anytime or schedule a free, no-pressure strategy session using the link in the description below. We'll talk about your goals, your numbers, and what it would actually take to make buying a home work for you, even if you're not quite ready today. Thank you so much, as always, for watching, and I'll see you in the next video.